$29 billion for Restaurant Depot. Leonard Green just saved private equity's first quarter.
Saved it or masked a disaster? Strip out that one deal and the PE exit market is completely frozen.
A win is a win, though I am way more distracted by the Unilever McCormick rumors. $44.8 billion to combine Marmite and Old Bay.
Gross.
Delicious. But before we raid the spice rack, we need to talk about Skydance sweetening the pot for Paramount. The rundown. $53 million for 150 megawatts in West Texas. Soluna isn't even pretending to be a crypto miner anymore. They're going full green data center.
You have to respect the pivot. Buy the Briscoe Wind Farm, power your own servers, skip the grid completely. It's the ultimate off-grid prepper move, just for enterprise AI.
It's smart capital allocation, which brings me to something I genuinely don't understand. Verda Partners leading a $1.7 billion significant risk transfer with Klarna.
Oh, I love a good SRT. It's classic balance sheet optimization.
Nate, it's Klarna offloading risk so they look prettier for an IPO. Call it what it is.
Hey, if I'm dressing up for a big night out, I'm wearing Spanx. Klarna is just putting on financial Spanx. Varda gets a nice yield, Klarna frees up capital, everyone wins.
Until the buy now, pay later defaults actually hit. But fine, let them wear Spanx. I'm looking at the industrial software side anyway. Peak Rock Capital just snapped up the health and safety software unit from UL Solutions.
Carve-outs are keeping the middle market alive right now. Apollo just dumped Sapphire Gas Solutions over to Antin too. PE firms are trading these infrastructure assets like baseball cards.
Speaking of trading cards, we need to talk about the spice aisle. The rumors on this Unilever and McCormick merger are getting loud.
$44.8 billion, I absolutely love it.
I'm calling nonsense on this leak. Why would the maker of Marmite buy a spice giant right now? The multiples don't make sense. It's corporate theater.
Because you own the entire flavor profile of the middle-class pantry. You get the mayo, you get the Old Bay. It's a massive defensive play. Plus, consumer staples need a growth story.
I read the Deloitte note this morning. The real growth story is banking. They're calling it a throttle-up moment.
Which is the most consultant phrase I've ever heard.
Right? But the regulatory backlog is actually clearing. We're going to see a flood of financial services deals by tomorrow.
They better hurry up before the alternative protein guys eat all the advisory fees. 70 companies in that space dead or merged in 18 months. Danone just dropped 1 billion euros on Huel.
Liquid meals for tech bros, truly a flawless asset.
Exactly. We'll track the banking wave tomorrow, but we need to talk about the actual lifeline the private equity market just received.
$29 billion for Jetro. Leonard Green is breathing a massive sigh of relief, and Paramount is suddenly getting very desperate. The big one.
$29 billion for bulk mayonnaise and commercial deep fryers.
Don't forget the 10-pound cans of nacho cheese.
Exactly. Jetro Restaurant Depot. Leonard Green Partners just handed the entire private equity industry a massive, greasy lifeline for the first quarter.
They really did. Because if you look at the Q1 data, PE sales volumes were absolutely dismal. Everyone is terrified of geopolitical stress fractures, and frankly, nobody knows how to price AI disruption right now.
So what do you do when you can't price a software multiple? You buy a warehouse full of frozen chicken wings. It is the ultimate defensive play.
It's actually really smart. I was digging into their footprint. There is zero AI risk in selling 30-pound bags of flour to local pizzerias.
None. And this is exactly the icebreaker the market needed. This $29 billion print proves the mega buyout is back. Buyers have cash, and they are finally willing to write the big checks again. Deloitte just put out a note saying we are hitting a throttle-up moment.
Okay, I have to stop you right there. Deloitte was talking about banking and capital markets M&A, not private equity buyouts.
It is all connected, Maya. The regulatory uncertainty is easing up across the board.
It really isn't. This Jetro deal does not prove the mega buyout is back.
How does a $29 billion deal not prove that?
Because it is a unicorn in a completely inflation-resistant, boring sector. Look at the broader landscape. You don't see this happening in tech or healthcare right now. This was Leonard Green finding the one asset class that lenders are actually willing to finance because the cash flows are bulletproof.
You are being way too cynical. A print this big changes the psychology in the room. I spent 10 years in those rooms. When a deal like Jetro closes, the partners at every other mega fund look at each other and say, why aren't we deploying?
Maybe they are asking that, but the debt markets are still answering with a hard no for anything that isn't physical infrastructure or food.
Fair, but speaking of food, the gossip mill is spinning completely out of control today.
Oh, I know exactly what you're going to bring up.
$44.8 billion.
For Marmite and Old Bay seasoning.
Unilever and McCormick. If that rumor holds any water, your theory about food being the only safe haven is spot on.
It makes perfect strategic sense for alternative protein and pantry staples to consolidate right now. But I will believe that $44 billion valuation when I see the actual term sheet.
Naturally, but while we wait on the Spice Kings to figure out their ratios, we need to talk about the media circus. Because Paramount Skydance is apparently sweetening their bid again for Warner Brothers Discovery.
Right after Netflix just abruptly walked away from the table.
Let's get into the drama. Voices. Deloitte put out a note this morning calling this a, quote, throttle up moment for banking and capital markets M&A. They are claiming the regulatory uncertainty has eased and the floodgates are opening.
Throttle up? Are we really taking consultant vibes as gospel now? Because I read that same note, and ease uncertainty is just a polite way of saying the government is not actively suing us this week.
Oh, come on. The timeline for regulatory approvals is objectively shortening. Banks have been sitting on their hands for 2 years. The capital is there. The pressure to consolidate is massive.
I will believe it when I see the actual term sheets. Right now it is just bankers manifesting deals because their bonus pools are looking thin. Give me hard data, Nate.
Spoken like a true cynic. Fine, you want hard numbers instead of vibes? Look at what market watchers are tracking in the alternative protein sector. Over 70 companies have been acquired, merged, or just straight up died in the last 18 months.
Fake meat is an absolute bloodbath right now. The irony.
Honestly, I was waiting for you to make that joke.
I had to. But seriously, 70 companies? Everyone pitched pea protein like it was the next enterprise software. Now it is just a graveyard of distressed asset sales.
It is classic consolidation. The venture money dried up, the hype cycle broke, and now the strategics are picking off the survivors for parts. Look at Danone dropping 1 billion euros on Huel. That is not a distressed sale. That is a major flag in the ground.
€1 billion for liquid meals. I guess tech founders still need to drink their lunch while they pivot to AI.
Exactly, and that appetite for massive food deals is bleeding into the broader market. Because if you think the alternative protein space is spicy right now, wait until you hear what is happening with actual spices.
Oh, please tell me you're talking about the Marmite rumor. Spill the tea.
I'm just trying to picture the boardroom synergy between Marmite and Old Bay seasoning.
Good luck with that. But $44.8 billion for Unilever to buy McCormick. That's a massive premium for paprika.
It's a flavor monopoly, Maya. Think about it. You control the spices, you control the pantry. It makes perfect sense if you're looking at defensive plays in consumer goods right now.
I don't buy it. Unilever is still trying to figure out what it wants to be when it grows up. They just spun off ice cream. Now they want to drop almost $45 billion on garlic powder. The math feels desperate.
Speaking of desperate math, Paramount Skydance is reportedly sweetening its bid for Warner Brothers Discovery.
Because Netflix walked away, which is the funniest part of this whole saga. Netflix literally looked at the WBD balance sheet, saw the linear TV debt, and just quietly backed out of the room.
Ghosted them. Total phantom move. But Skydance is still at the table, probably digging through the sofa cushions for extra equity.
It's a fire sale masquerading as a strategic merger, but honestly, the real bloodbath right now is in food tech. Forget the spice aisle. Have you looked at the alternative protein numbers?
Oh, it's an absolute graveyard.
70 companies? 70. Acquired, merged, or just completely shut down in the last 18 months.
The fake meat bubble popped, though Danone just dropped €1 billion on Huel, so somebody still believes in drinking your meals.
That's a survival play, not a growth story. But you know what sector is actually shifting from caution to accelerated activity?
Let me guess. The banks, Deloitte is calling it a throttle up moment.
Exactly. We're seeing regulatory timelines suddenly shrink, which means tomorrow we need to talk about exactly which financial services players are about to unleash a new wave of deals. Tomorrow's radar?
Deloitte is calling it a throttle up moment for banking M&A tomorrow. Regulators are supposedly shrinking approval timelines, and every VP is suddenly dusting off their pitch decks.
I am deeply skeptical of that narrative. You don't just erase a year of geopolitical stress because some regulators decided to answer their emails faster. Show me the term sheets first.
Fine, if you hate banks, look at Alt Protein. Danone just bought Huel for 1 billion euros.
Now that is actually fascinating. Over 70 companies in that space have merged or straight up died in the last 18 months. It is a total bloodbath.
Danone is basically buying the survivors, which brings me to the absolute wildest rumor crossing my desk.
Oh no. Is this the Marmite thing?
Unilever and McCormick, $44.8 billion. Imagine a mega merger that controls both your morning toast spread and your taco seasoning.
I refuse to imagine that flavor combination. But speaking of massive consumer deals, we need to unpack how Leonard Green actually pulled off that $29 billion Jetro exit.